This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices fell on Monday as civil unrest in Iran subsided, reducing the likelihood of a U.S. attack that could disrupt supply from the major producer, while the market also tracks the escalating standoff over Greenland. Brent crude was trading at $63.79 a barrel at 12:39 GMT, down 40 cents or 0.62%. U.S. West Texas Intermediate for February fell 44 cents, or around 0.74%, to $59 a barrel. The contract expires on Tuesday and the more active March contract was at $58.98, down 36 cents, or 0.61%. China's refinery throughput in 2025 rose 4.1% year-on-year, while crude oil output grew 1.5%, both all-time highs, government data showed on Monday. The world's second-largest oil consumer processed 737.59 million metric tons of crude oil in 2025, the National Bureau of Statistics said. That is the equivalent of about 14.75 million barrels a day, Reuters calculations showed, exceeding the previous record of 14.7 million barrels of oil per day, set in 2002.
Moving on to the top news in the energy sector.
China's mostly coal-based thermal power generation fell in 2025 for the first time in 10 years, government data showed on Monday, as growing renewable generation met growth in electricity demand even as overall power usage hit a record. The data is a positive signal for the decarbonization of China's power sector as the country sets a course for carbon emissions to peak by 2030. Still, coal output edged up to a record high last year. Thermal electricity, generated mostly by coal-fired capacity with a small amount from natural gas, fell 1% in 2025 to 6.29 trillion kilowatt-hours, according to the National Bureau of Statistics.
China is importing the most Russian Urals crude since 2023 at prices lower than Iranian oil after top buyer India cut imports sharply due to Western sanctions and before a European Union ban on products made from Russian oil, according to trade sources and shipping data. Tougher Western sanctions on Russian oil producers and pressure from the Trump administration pushed Indian refiners to scale back imports in December and seek alternatives. Top importer Reliance Industries, whose refined products are exported to EU, halted Russian oil imports in January. India's lower demand boosted the supply of cheap Russian crude for China, providing a buffer for the loss of Venezuelan oil at the world's top oil importer. Next, we have the top news in metal markets. China's aluminium production crept above 45 million metric tons in 2025, largely in line with a government-mandated national output cap and marking a slowdown in growth from 2024, government data showed on Monday. Full-year output in the world's largest consumer and producer of the light metal rose 2.4% to 45.02 million tons, the National Bureau of Statistics data showed, a slowdown from the growth rate in 2024 of 4.6%. December output rose 3.0% year-on-year to 3.87 million tons. Output was close to a long-standing capacity ceiling of around 45 million tons per year mandated by the government as part of a broad effort to curb oversupply.
Gold and silver hit record highs on Monday, driven by a flight to safety after US President Donald Trump warned of extra tariffs on some European countries in a dispute over Greenland. Spot gold jumped 1.7% to $4,672.49 an ounce by 12:05 p.m. Eastern Time, 17:05 GMT, after scaling a record peak of $4,689.39. U.S. gold futures for February delivery advanced 1.8% to $4,677.70 an ounce. Trump threatened several European allies with a series of escalating tariffs on Saturday unless the U.S. is allowed to buy Greenland, intensifying a dispute over Denmark's vast Arctic island.
We will now look at the top news in the agricultural sector.
A Chinese importer bought a cargo of Canadian canola shortly after Canadian Prime Minister Mark Carney's visit to Beijing last week, trader sources said, boosting prospects for Canadian farmers and potentially undercutting sales by rival supplier Australia. The Panamax cargo of about 60,000 metric tons of Canadian canola is the first since China halted imports in October, and is expected to be shipped after March, two traders with direct knowledge of the deal told Reuters on Monday. On Friday, Carney said Canada expects China to cut tariffs on Canadian canola seed to a combined rate of about 15% by March 1 from 84% currently, part of an initial trade deal that also reduces tariffs on Chinese electric vehicles.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.